Hey traders, this is Blake Morrow with Traders Summit, and with me today, it's been so long, it's Michael Brown from Caxton FX, head of market intelligence. It's good to have you here, Michael.
Good evening, Blake. It's good to be here. It's been a long time and a lot's changed since we spoke in December.
Yeah, I was just going to say a lot has changed. Last we spoke was about the holidays, well, just before the holidays, and we were talking about central banks, and obviously expectations have shifted quite a bit. You have joked that the ECB wasn't going to raise rates until pigs fly. Are they flying, or are we going to get some flying pigs? What do you think? What's your thoughts there?
Well, I think we might, unfortunately. That comment hasn't aged very well at all. I think I was just thinking, I think it was the 15th or 16th of December when we last spoke. So it was just before the Bank of England and the ECB both sort of started their kind of hawkish pivots. And then they've obviously continued that at their policy decisions at the start of this month. And actually, all of the noises that you're getting out of central banks, not just in Europe, but in the States as well, of course, with the Fed, is very much kind of panic-stricken. Monetary policymakers, for some bizarre reason, seem to have been caught off guard by this surge in inflation. I don't think it's the fact that it's happened. I think it's the extent to which inflation has surged that's perhaps caught the governors of these central banks off guard. And really, they're now panicking. They're pretty much globally, central banks are, I think, so far behind the curve that they can't actually see the curve anymore, which is why you're having this massive hawkish pivot. So I think, my comment about pigs flying, I think pigs might start flying. I think the ECB are certainly teeing us up for a hike in the second half of this year, which, as little as 6 weeks ago, I would have said there was absolutely no chance of that happening. So yeah, pretty dramatic and swift turnaround.
Now, when you talk about central banks being behind the curve, and you're talking about basically expectations. I mean, we look at inflationary pressures. Obviously, they're really high right now, and that's the big concern of central banks. Probably more so here in the U.S. than in Europe and your part of the world. However, how do you feel about inflationary pressures moving forward? There's a lot of economists that believe that we are near, we could call it peak inflation, if you will, or, inflationary pressures are going to start coming down, maybe peak in this month or maybe next month. What are your thoughts there?
Yeah, I mean, I would agree with that. I think we're probably going to see US CPI peak on a year-on-year basis in February, if it hasn't already done so in January. Here in the UK, that peak will probably come in April. That's mainly an idiosyncratic thing. We've got something called an energy price cap, which lurches higher by about 50% in April, which will keep inflation higher until then, and then it will start to roll over. And I think in the Eurozone, we're probably already past the peak when it comes to CPI. What I would say, though, is that I don't think we're immediately going to go from 7.5% CPI in the US to 2%, where the Fed want things to be. It's going to be a very, very slow rolling over. Yes, all of the one-off factors are starting to fall out of the data a little bit, but we've still got very, very disrupted supply chains. And of course, now we've got an incredibly tight labor market, not just in the States, but here in the UK as well. And you're starting to see significant pressure, some significant upward pressure on earnings. So I think there's definitely a need for central banks to tighten things up. But I think the market has got a little bit overexcitable in terms of what it's pricing in. I was looking earlier, I've got it on the screen here. We've got pretty much 7 Fed rate hikes priced by the end of this year. Markets are expecting the BOE to have bank rate at 2% in December. And when you look at what's likely to happen in H2, where you're going to have inflation rolling over quite substantially, and also you're going to have growth slowing quite significantly as well. I think for central banks to deliver that is quite foolish to expect in a way.
So if you think that we're at really peak expectations, then, I mean, as far as pricing, what people are pricing. So I
think so. Yeah. There's a lot that, it kind of sums it up when the narrative over the last couple of days has been, since the CPI number dropped, are the Fed going to do an emergency hike? Of course, the Fed aren't going to do an emergency hike, for goodness sake. Right. And I think that for me, kind of marks the peak in terms of hawkish policy expectations. And there's a lot, I think, that the market is going to have to price out.
So, well, let me ask you this. As a trader, I'm thinking, okay, the thing that moves, and let's just talk currencies because that's what you really specialize in over at Caxton. Where are the convergences and divergences going to be? Because, obviously it's rate hikes and expectations that really lead currencies in certain directions. So what central bank do you think is, pricing's off significantly where? That's, I guess, my question.
Well, I think the first thing is, are there any G10 central banks that are going to live up to what the market is currently pricing in? I would say probably not. Even somewhere like, Australia and New Zealand, that the pricing seems to be way off at the moment. So I think that's the first question. Market pricing everywhere is going to have to come back quite significantly, I would expect, between now and the end of the year, particularly in H2. So then you start to look at, as you say, where are things most out of whack? And I would say there, I'm looking probably at the Fed. I think the Fed, pretty much, I think they're going to lose their bottle in H2 and not continue on the aggressive pace that the market is currently expecting. And also the Bank of England. I don't think there is the appetite among policymakers at the BOE to raise bank rate near 2% by the end of this year. The other thing, of course, with the Bank of England is that when the rate gets to 1%, they're going to start looking at actively selling their portfolio of gilts. Now, I think it's quite a long shot that the BOE are going to sell gilts into the market and hike by another 100 basis points, all in the space of 6 months. So I think actually what you're really looking at is a situation where, although it's proving relatively resilient at the moment, and I think tensions between Russia and the Ukraine are partly to blame for that, I think actually the outlook for the dollar is a little bit soft, given where the market is in terms of its pricing. And also I think the outlook for the pound could be a little bit soggy as well.
Okay, so and as a trader, maybe we can express that in the euro sterling. We have the euro sterling that's near some pretty critical levels of support around the, let's just call it 84 pence level. So what are your thoughts? Do you have any ideas of how you'd like to express that?
Yeah, I mean, I think euro sterling, long euro sterling is worth looking at. I mean, fundamentally, euro sterling has been stuck between, from memory, kind of 81, 82 to sort of 90-ish since we voted to leave the EU back in 2016. We tested the bottom of that range towards the tail end of last year, when markets were pricing in this big divergence between the BOE and the ECB. Everyone was saying the Bank of England are going to hike pretty relentlessly, and even I was saying, pigs are going to fly before the ECB hike. That's probably not the case now, and actually that divergence is starting to narrow. So you would expect euro sterling to start rallying as a result of that, and maybe even euro dollar has a little bit of upside. I mean, it kind of pains me to even think about being long the euro, but when you look at what market pricing is saying for central banks, it's almost the logical conclusion at the moment.
Yeah. Okay. Well, that's fair enough. And, as traders, we know that some of the best trades they usually come from the ones that just don't feel good initially anyway.
Definitely.
So,
definitely.
Since we haven't talked in so long, let me ask you this. Is there anything else that's really standing out to you right now that you feel that the community, the markets might be not looking at right now that they should be?
Well, I think a number of people are looking at this, but I don't think it's quite getting the attention that it perhaps deserves. And that's what's happening with the yield curve in the States. The Treasury curve is just relentlessly bear flattening. We're getting, I think this week, if we get another weekly rise, it's going to be a 9th straight weekly rise in the 2-year yield at the front end of the curve. And in the same time, the 10 years moved about 20 basis points or so. And actually, this creates quite an interesting environment, because I think, maybe even as soon as kind of end of March, beginning of April, if we just extrapolate the current pace, you're going to have the 2s, 10s and the 5s, 30s both negative, just after the Fed have started to hike rates, and just after the Fed, the Fed are looking to run down the size of their balance sheet. Now, I'm not saying we're going to get a recession. I don't think that's likely at all. But what I do think is going to be interesting is the second half of the year, an inverted yield curve, a pretty steep growth slowdown, particularly in the States, as the fiscal support that's powered the economy over the last couple of years increasingly becomes a fiscal drag. Obviously, you've got elections, midterms in the mix as well, and slowing inflation. I think that creates a real kind of difficult situation, not just for policymakers to communicate in, but also for market participants to trade. And I just wonder whether some kind of lingering uncertainty about what's going to pan out after the end of Q1, particularly when it comes to that yield curve, is maybe why we're starting to see a few jitters emerge in risk assets. Obviously, you've got the geopolitical risk as well, but I do just wonder whether that is starting to play on a few minds. And I think certainly as we move through the year, we're going to hear more and more about it. And I think you won't be able to move for the word yield curve at some point later this year.
Well, I'm glad you brought that up. And I think, the flatteners everybody's watching that too. And I think you're spot on. People should be, and traders should be paying maybe more attention to it and talk about it a little bit more as time goes on. So Michael, I want to say, thank you so much for joining us today. And if I want to find out more about you, how do I do that as a trader?
Well, thank you very much for having me again. If you want to find out more about me, then or us, we're at caxtonfx.com/business. All of my analysis is quoted on there on a daily basis, and also Twitter, Mr. M Brown. You'll be able to find me there as well.
And I tell you, you're one of my favorite follows on Twitter. I always love to engage and look at your conversations on what you got going on there. And remember, folks, if you're watching Michael at home, make sure you give him a thumbs up. If you're watching on YouTube, subscribe to the channel so you don't miss any of his content, because we publish not only these videos, but we also publish other videos that he puts together, hopefully, usually every week. And Michael, I want to say thanks for being a guest here.
In those videos, I wear a tie and go into an office. I'm looking a little bit scruffier than usual today.
Yeah, I swear I continue to look for flying pigs in the backdrop. Haven't seen them yet, so you tell me they might
maybe
be coming.
Next time.
All right. Well, have a great day, and thank you so much for joining us.
Thanks for having me, Blake. Cheers.
Cheers. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.